Well, confusion reigned about BHP today. Bloomberg reported this time last night that China had banned all new BHP iron ore cargoes. But then this morning, a Chinese commodity pricing firm named My Steel said they checked it out and it wasn't true. Amazingly, BHP was silent, so investors traded its shares all day in the dark. I mean, either it's true or it's not. And surely the company should tell the market which of those it is. If it's true, that's a big deal for BHP since 60% of its iron ore goes to China. But in that case, 11% of China's steel production would be at risk. So BHP's product is probably irreplaceable. Nevertheless, there's often fire where there's smoke. BHP shares didn't fall very much considering, which suggests that investors think there's no fire. But they did shift a few pennies from BHP to Rio and Fortescue just in case. The market was weighed down by falling banks and Drone Shield continued to surge. The Aussie vendor of drone defence systems is up 44% this week. The oil price continued to fall today because of concerns about a supply glut if OPEC keeps increasing output. American shares rose last night ahead of today's government shutdown. The last of these was 35 days from late December 2018 to January 2019, and during that period the US share market went up 0.4%. So she'll be right. And the US dollar was also untroubled by the shutdown, so the Aussie fell a bit. And finally, I've got one graph to show you about house prices, which were up again in September to a new record high for the national median of $857,290, an extra $42,000 this year. Yes, housing affordability is a global problem, but nowhere more than Australia. And that's finance.